This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
U.S. corn supplies will shrink by more than previously forecast due to rising demand from the ethanol, livestock feed and export sectors, the U.S. Agriculture Department said on Friday. The supply outlook sparked a rally that pushed corn futures to their highest in nearly 8 years, and heightened focus on the next U.S. crop currently being planted to rebuild supplies. In its monthly World Agricultural Supply and Demand Estimates report, USDA forecast that the domestic corn stockpile will fall to 1.352 billion bushels by September 1, down from 1.919 billion bushels in September 2020. That compares with the government's March outlook for corn ending stocks of 1.502 billion bushel.
India's fuel consumption rose in March for the first time in 3 months, to its highest since December 2019, as economic activity gradually picked up after a coronavirus-induced slowdown. Consumption of fuel, a proxy for oil demand, rose 17.9% to 18.8 million tons year-on-year in March, data from the Petroleum Planning and Analysis Cell, PPAC, of the Ministry of Petroleum and Natural Gas showed on Friday. On a monthly basis, demand rose by 8.7% from February, when it fell to a 5-month low.
Moving on to the top news in the energy sector.
China is paying a high price for its unofficial ban on coal imports from Australia, with the cost of domestic and alternative foreign supplies rising for both thermal and coking grades of the fuel. China, the world's biggest importer, producer and consumer of coal, has effectively ended imports from Australia, the biggest shipper of coking coal used to make steel and number 2 in thermal coal used to produce electricity, as part of an ongoing political dispute between the two nations. The restrictions on imports from Australia came into effect in the second half of last year, resulting in China's imports dropping to virtually zero in the first 2 months of this year from a 2020 high of 9.46 million tons in June, according to Refinitiv vessel tracking and port data.
U.S. President Joe Biden on Friday proposed $14 billion in spending on initiatives to fight climate change in the 2022 budget, including large cash injections for environmental regulation and science research. The proposal underscores the administration's ambitions to decarbonizing the economy by 2050 to stem global warming, reversing a policy direction set by former President Donald Trump to slash red tape that hindered fossil fuel production. Biden's so-called skinny, or preliminary, budget proposal includes $11.1 billion for the U.S. Environmental Protection Agency, a 21.3% boost over last year's enacted level. Next, we have the top news in metal markets. China's refined copper imports are expected to fall by around 27% in 2021 from last year's bumper levels, while primary aluminium inflows will more than halve, state-backed research house Antake said on Friday. Top metals consumer China imported record amounts of copper and aluminium in 2020 as a rapid demand recovery from the impact of COVID-19 pushed Chinese metal prices above international prices, opening up an arbitrage for cheaper overseas metal to flow in. Antake, the research arm of the China Non-Ferrous Metals Industry Association, sees refined copper imports totaling 3.4 million tons this year, down 27.2% from 4.67 million tons in 2020, analyst He Xiaohui said in an annual market outlook event.
Copper prices edged lower on Friday as strong Chinese inflation data raised fears that the world's biggest metals consumer will tighten monetary policy, though expected supply tightness kept prices on course for a weekly gain. Benchmark copper on the London Metal Exchange (LME) was down 1% at $8,919 a ton at 17:02 GMT, but on course for its first weekly rise in a month, up about 1.5%. A barnstorming economic recovery in China and speculative buying pushed the metal used in power and construction to $9,617 in February, its highest in a decade, before prices stagnated.
We will now look at the top news in the agricultural sector.
The Brazilian government temporarily reduced its biodiesel blending requirement for diesel fuel to 10% from 13%, according to a Mines and Energy Ministry statement on Friday that cited strong demand for soy as a reason for the decision. About 70% of Brazil's biodiesel is produced from soy oil, which is obtained after grain crushers process the beans. The remainder comes from bovine tallow and other oils, the ministry said. The decision to lower the biodiesel requirement was dubbed a corrective measure to mitigate temporary distortions in the market. Biodiesel prices have skyrocketed recently, amid high soybean prices, implying higher final diesel prices at pumps.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.